Hi everyone. Today let's talk about my options portfolio. I'll do a quick overview of the indices and my current bias. Then I'll talk a couple commodities like oil as well as gold and silver. Then I'll go over my current positions with Robinhood and Tastyworks, as well as my watch list for the upcoming week. I also have a couple of new strategies that I'm testing out that I will go a little bit more in depth on once they come up later in the video. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single week, so definitely hit the bell so you don't miss out on any future videos. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the S&P 500 on the weekly chart, we look primed to make new highs here in the upcoming week. We had our little dip in the middle of May, and we've surged back towards those previous highs. And it seems like we're going to get a test up here of around 4,300 or maybe slightly higher. Otherwise, this is still a very clear uptrend, but it is worth noting that we're starting to get pretty extended from these moving averages on the weekly chart. Going down here to the 8-hour chart, you can see we've been flat for quite a while with some slight oscillations from high to low, retested those moving averages here, and then recovered back up towards those previous highs. And then we had a strong couple of days into the close of the week, again indicating that we could see short-term highs somewhere around 42.50. Overall, everything on the S&P 500 is pointing to more upside in the coming weeks. Moving over here to the weekly chart for the Nasdaq, similar story, still a very clear uptrend, but it is slowing down more so than the S&P 500 is, and that's because we're seeing potential for higher rates and inflation, which is going to make it more difficult for the growth stocks in the Nasdaq to be successful. This is still a bullish play, but less bullish, and I still think there's potential to retest these highs around 14,000. Which if you're trading the QQQs is going to be close to that 350 level here on the weekly chart. Moving over to the 8-hour chart, you can see it's been very flat for quite a while here, going all the way back to April, where we saw these prices for the first time. Otherwise, we had a very strong on the last day of the week, and I suspect that momentum will carry us up to somewhere around 337 to 340, indicating a little bit more upside in the coming week. But I don't expect to see new highs in the short term, which would put us above this upper band here on the ATR chart. Although this was a relatively impulsive move, I just don't see it breaking out to new highs when there's still so much risk around inflation. And lastly, for the indices, moving over here to the Dow Jones Industrial or the diamonds, you can see this trend is accelerating here to the upside, and the 8 EMA is getting closer and closer to those upper ATR bands. Certainly seems like there's more risk here, but most of the recovery plays sit here in the diamonds, and this is a stronger trend than either of the previous others, even if it's a little bit slower moving. Overall, diamonds are a little bit stronger than the SPY, and then the SPY is a little bit stronger than the QQQs going into the next week. Moving over here to gold, you can see we have a nice strong uptrend here on the weekly chart, but we are getting pretty close to that upper bound on the ATR, which is currently sitting around 181 on GLD. On the 8-hour, we're looking a little bit flatter, and I think that's because we're coming into those higher ATR levels on the weekly charts. So the growth here is going to slow down, potentially in the short term, but I still expect that we'll see more upside in gold. Moving over to silver on the weekly chart, you can see we have quite a bit more room for upside up to that higher ATR band sitting around 28.50, which offers more than 10% gain here for silver going forward. And the trend here is definitely up, sitting well above that 8 EMA. On the weekly chart, going down here to the 8-hour, it is a little bit flatter, but you can see we had a nice bounce down here at 25.27, and it looks like we could see a retest this week into the 26.50 area, which would be a nice gain from current prices. Moving over here to oil or USO, you can see we are sitting right on that upper ATR bound, which means this is a very, very strong trend, and it continues to accelerate upwards. We hit the resistance level here on the 8-hour chart, rejected, and then continued up through that level, came back down and back tested that level and continued upwards. So we now have this support level sitting at 46.76. Even looking at the daily chart, it seems like this trend is continuing upwards, if not accelerating a little bit. But understand some of the context here on the weekly chart. We're coming down from really high numbers on USO as we had that really large decline in demand here. But it does seem like we're going to see some growth, maybe up to the 144 EMA, which is currently sitting at 59.62. And it doesn't seem unreasonable that we could get a retest of that in the shorter term. Otherwise, the next resistance point is at 49.60. Again, with a longer term goal sitting at 59.62. Moving over here to the ARK Innovation Fund, which I kind of use as a surrogate ETF for all growth stocks. You You can see we had a little bit of a bounce here on the 55 EMA on the weekly chart. We're still stuck between that and the 8 EMA, which is still showing a pretty strong downtrend. But if this continues to hold in here, we could find a bottom at 105, which would indicate potential upside into the 140s. It certainly seems like the sell-off in growth might be slowing down, and maybe it's time for the diamonds to see a little bit of a retrace from that strong trend and for growth to start outperforming once again. Looking at the 8-hour, you can see we did have a little bit of a bear market run up into that 113 level before getting rejected. And again, here in the short term, we had a nice little bounce into the end of the week. And we're sitting right on that EMA, which would potentially indicate a higher low than we saw here in mid-May. If that is the case, that would give me an upside price target of around 117.72 or 118, which would be a pretty good upside move here in the short term. If there's any stocks or indices you want me to cover in the next video, definitely throw those down in the comments. Otherwise, moving over here to my portfolio with Robinhood, been a strong couple of months here, up almost 17% in the past 3 months, which is very good, and a little bit stronger than my price target of around 1% per week. And a lot of this recent growth here from the middle of May is due to the strong growth here in oil, which is what I was talking about previously. You can see I have a play here in Marathon Oil, obviously an oil stock, which is continuing to do well with oil prices going up. I've also been playing USO as well as SLB. SLB is a little bit more extended than MRO is right now, but I am still bullish there. And then you can see my USO position here. Otherwise, I have US Steel. This is a play for me because of inflation. So commodity companies I expect to do well, especially with the reopening and the demand for steel going up. Then I have DraftKings here, a growth play, but I believe in this very long term because I think sports gambling is going to do well. Then we have Match Group. This is a tech play, which kind of is a little bit of a recovery play for me because I expect people to want to go see people outside of just the internet. So you can meet people over the internet, but it still gives you the opportunity to meet those people as we are basically fully open now, which could drive more use of Match, especially as people get more busy as we go back to our jobs, as we continue to see higher employment. Also, looking at Match Group, you can see we're pretty well off of our highs, currently sitting down at 137 with a high here in February of 172. Certainly 172 seems pretty ridiculous, but there has been support levels here at 131 and back again here at 131. So it makes sense why I sold the 130 to 120 puts, as I expect to see that support level in that same range. And I got a $1.20 credit for that, which is a little bit low for what I like to see in terms of credit, but still a good support level. And Match is a company that I think will do well going into the future. Here I have SLV. Silver, which I showed earlier, is doing well and has a little bit more room to grow than gold. Snapchat continues to do well and expand into the advertising realm, and advertising demand continues to rise again as we reopen. And Snapchat also has improved their platform pretty dramatically and seems to be challenging some of the other companies in terms of market share more and more. Tattooed Chef, this is a smaller play for me, but I still think this is a company that can do well. It's been pretty volatile here over the last year, but it's still up almost 79%. Does seem like we might be running out of steam here, and I might want to close this position since it's in a little bit of a profit right now. Otherwise, there's definitely support in this previous low here around $17 per share. And then I have GE, which is a company I've been talking about for quite a while. The stock was down here a little bit on the last day of the week, and over the last week overall, it was down a little bit over 2%. I know it doesn't look like much when you have this massive bull run, but I did close my position for a profit in here, and then I waited for it to retract a little bit. And I do suspect we will find support in this previous high from middle of May, right around $13.50. And you can see I have a good price here at $13 down to $11.50, and I got a 20-cent credit for that. So I expect this to expire out of the money. Moving over here to Tastyworks, you can see I had a pretty strong week, getting back into the green on my IRA and trimming some of those losses here on my individual account, which hopefully is a sign of a reversing in my trend of losses and an indicator that my new strategies are starting to work a little bit better than they have in the past few weeks. Moving over to my positions, you can see I have a strangle here on bonds. This is the 10-year bond notes. You can take a similar position on a stock like TLT if you want to get neutral here on bonds. And you can see it's been very flat here for quite a while, looking at the 4-hour chart, and even on the daily chart, it's been chopping in between the 1 ATR level. I expect we'll see a little bit of downside in the next week, get a retest of this lower level back down here, and then continue back and forth. Looking at TLT, you can see here it's very similar on the 4-hour chart and potentially looks even more extended to the upside than bond futures. And as inflation continues to go higher, I expect bonds to go lower, but we saw a slight reprieve in that at the end of last week. Going back to positions here, I have a Poorman's covered call here on Apple. You can see I paid $3,300 for the 100 calls, and these have 593 days until expiration. And what I do here is sell the short-term calls to capture some of the upside, but really to capture this theta decay. This allows me to be long Apple stock for less money and still benefit from theta decay and some upside potential. So the way that I track this is by using this spreadsheet. So I take the value of the leap at the current price and the leap when I bought it. So I have the change in value of the leap and then the credits that I receive from the calls that I sell against this in terms of the credits that I receive. So you can see I've received a little bit over $3 in credit, which results in a dollar gain of almost $300, which should take up to 57 days for this most recent call to expire, which would result in a 57% gain over the course of the year if this rate of profit continues all the way through the end of the year. I also have a leap here in the S&Ps, doing the same thing, bigger positions, so I have a little bit bigger dollar gain, and I've also made some mistakes in here in terms of moving these call credits around when I shouldn't have been, because I thought there was a little bit more downside risk than there was. Otherwise, it's continuing to do well, and as I mentioned, it allows you to be long the stock without putting up as much risk as buying 100 shares of either SPY or Apple. Moving over here to Boeing, I have what's called a ratio spread. This is a little bit tough to do if you don't have a margin account or if you don't have enough capital to buy 100 shares of a company, but I do want to look at the curve analysis. This is what the profit profile looks like. The stock is currently sitting at $250, and if the stock stays right there, I will make $290 profit at expiration. But if the stock moves down and finishes at $225, that would be my max profit level at $790 at expiration. And as we go down here, you can see my break even to the downside is at $117. So the stock would have to move down pretty dramatically for me to lose any money on this position. And if it did do that, the result would be me buying the stock at $217 when it's currently sitting at $250. So this is really the power of options. If you wanted to buy the stock right now, you would lose quite a bit of money on 100 shares before it got down to $117, where in my case, I would be buying the stock down at $117 if the stock dipped significantly from current prices. And because I have a margin account, you can see I only had to put up $2,800 for me to take this position. And my return on capital is around 10% in the next 40 days. So it's a very high probability trade with a still very high return on capital. Moving over here to CrowdStrike, this had a pretty good dip into the end of the week. As you can see here on the 4-hour chart, we are getting into those lower ATR levels, which is usually a pretty good indicator of an entry point. At least in the short term, I expect to see a bounce back up into the 215, 216 level. And CrowdStrike is another company that I expect to do well. And you can see I got almost a $2 credit for a 10-point wide, so risking around $800 here, which would give me a break even all the way down at 183. And looking at the chart, you can see a 183 is all the way down here, back at the previous lows that we saw in the middle of May. And even if we got anywhere near that point, I expect to see a bounce, as we did find support in that level before. Moving over here to Disney, again, this is a ratio spread. Not as much profit here potentially. I only got $161 credit for putting up a little bit over $3,000 for this position. But again, looking at the profit profile here, you can see the stock is currently at 177 and my break even is all the way down here, slightly below 165. So the stock would have to move down quite a bit before I lose any money. And if it stays right where it's at, I make $160 in the next 33 days. Moving over to Ford Motor, I talked a little bit about this in my last video. The Ford Lightning pickup truck does look very good. There's also a lot of volatility in here. You can see I was able to get down to $14 for the put price, and I got $43 to take that position to buy the stock at $14, or slightly less than $2 below current prices. And I only had to put up $250 for that put on the margin account, so very good return on capital. Moving over to one of my IRA positions, this is an Iron Condor on gold, just because it is slightly overextended to the upside in my opinion. And looking at the daily chart again here briefly from what I said before, I don't expect we're going to see much higher than 181 even if we get a slight rally into the next week or two. Pretty overextended on that ATR chart. So looking at the position here, you can see I sold that 181 call, and I don't expect that we're going to see a break of that price before we see a little bit of a retracement, which should allow me to get out of that position for a profit. Currently sitting in a slight profit of $2. Otherwise, moving over to PLTR, this is another naked put. This is a stock I would like to buy, but it just continues to rally, so I haven't been able to get a good position. If I could buy it at 19, that would be great. And I got a $56 credit here, and I had to put up slightly less than half the money, so $724. Pretty good return on capital, slightly less than 10% there. Moving over to Peloton, I'm actually slightly bearish here. This is an iron condor, and I expect the stock to continue to go down. You can see we had a pretty strong downtrend over the last couple of days. Even looking at the 4-hour chart, you can see we were at that upper ATR band, and we seem to be testing that lower ATR, but I would like to see this go down over the next week. Another stock that I'm very bullish on is Simon Property Group. Had a slight downturn, so I opened a position there. You can see we've had a very strong rally here on the 4-hour chart, and we're sitting right in the middle of that range. So I sold the 125 puts for $187, so slightly less than $2 or a break even around 123. And you can see that the 123 level is right at that 144 EMA or all the way down here. I don't expect we will see a break of that level. And even if we do, I expect to see more upside as the reopening continues to accelerate. Otherwise, you can see my SPY, Poorman's covered call that I mentioned on the previous chart. Then I have XOP, which is an oil and gas ETF. Continues to rally, which I should have expected, I guess, as oil prices continue to rally aggressively. But I think they might be a little bit overextended here. So if we could see a small dip, I would really like it to close below 195. Only a small loser here at $33, but I would like to see a small dip, and I could get out for either a scratch or a small profit. Moving over into my watch list, this is actually the list given by Tastyworks for consumer discretionary. And I wanted to look at this specifically because I think these companies are going to benefit strongly here from the reopening as they continue to see good numbers. You can see Ford at the top of the list here, a stock that I'm already playing. I think GM still has some potential upside from here. But one of the companies that I really haven't touched here recently is Nike. It's been pretty flat here recently on the weekly chart. And here on the daily chart, it has been testing that 144 EMA. But I don't think we're going to see prices too much further below where we are right now, which could give you the opportunity to take an option position, which would benefit from the stock going sideways or bouncing up slightly. They do have earnings here in a couple of weeks on June 24th, so I wouldn't trade too long term if you're going to play Nike. Otherwise, wait for the earnings announcement and then you can play it after that. Otherwise, there's restaurant companies like Darden Restaurant, another company that is going to potentially see some upside from the reopening and the rise in demand. Currently giving a pretty decent buying opportunity, retesting those lows we saw here in May. Garmin, another very strong company in terms of consumer discretionary. Target, also a very good play. Kind of hard to trade Target as it continues to trend upward very aggressively. And this trend is still intact. There's potential we could see prices up in the 240s before too long in the coming weeks. Carnival Cruise continues to do very well as there's a potential reopening in sight. A little bit overextended to the upside here, but if we see a downside move of a couple of dollars, could be an indicator of an entry point. We have Royal Caribbean along the same lines. eBay, another pretty good stock. Currently overextended to the upside in my opinion on the daily chart. But if we see a slight retest back into the $60 level, it seems like we could see further upside from here. Otherwise, we have Amazon here, a little bit too big to play with options, but if you're willing to buy a very expensive stock, there's potential upside here, especially with their purchase of MGM, adding to their Amazon streaming service. Otherwise, some of the stocks that I'm really looking at here is Ulta Beauty. Not a ton of liquidity here, so be aware of that. You might see some wider spreads, but we did have a jump in price here, a retest of that midpoint, which is indicating an entry point for me, in my opinion. I might wait to see the crossover here on the stochastics to the upside, but this is a potentially good entry point, in my opinion, for Ulta. Dollar General is another stock that's done very well. And we recently saw a little bit of a retracement and a strong move up above that 8 EMA on the daily chart, again indicating potentially further upside. You also have Starbucks here, a little bit off of its highs, which is what you want to see in terms of an entry point. Potentially looking at an upside of $120 per share, currently sitting at $112 or so, with a potential risk here of $109. So pretty good risk reward in my opinion. Another stock that wasn't on that list that I'm a little bit surprised is Estee Lauder, ticker symbol EL. Again, another stock that I expect to do very well in the reopening and potentially presents an upside of around $320 per share, currently sitting at around $303, which found support right around $392. but I expect the real support here is at the whole number of 300, representing some potential upside here of around 5%. I also want to talk some basic materials here. So we have silica, which is a silicone company, obviously in high demand due to the chip shortage, definitely performing quite well. Also a very cheap stock at only $12.36, so you can trade this even if you don't have a large options account. Also, we have American Steel, which I mentioned previously, a stock that I'm bullish on. Neurocore, a little bit more expensive stock, but it has been rallying massively over the past couple of months. You could argue that it might be a little bit overextended here, but the rally continues. Another one here is gold. This is a gold mining company, so it's obviously correlated with gold, but you can see it's down quite a bit here at around $23 per share, up quite a bit off its recent lows of around $19.50. This is also a company that Warren Buffett owns shares of, which is a vote of confidence for this company, potentially looking at upside of around $25 per share from current prices, so around 10% upside potential. Another company worth mentioning here is Dow. This is not the Dow Jones Industrial. This is actually a chemical manufacturer and another stock that is benefiting from the manufacture of raw materials and very high demands here in the short term. Certainly not overbought at a PE of only 26 and a dividend currently at around 4%. Definitely offers some upside potential in my opinion. Let me know down in the comment section what you think of the indices or if you get any trades out of my watch list. Also, let me know if you have any questions on any of my positions, and definitely like and subscribe if you got any value out of this video. Hit the bell so you don't miss out on any future videos. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.